You know what? Well, I guess we should cover the next article before I say who's going to really benefit from them pulling out. But this is the third and final straw, I guess you could say, that we found. Can you see that? I can't see. Okay, yeah. Sorry, I'm producing live here. Zillow kills its iBuying program. It announced Tuesday that the company is exiting the iBuying business. A mind-boggling about face that the company completely changes Zillow's business model and will result in the loss of about 1,605 jobs. All right, hang on. It's not a complete change of Zillow's business model. They had one that was making like 400 million. They had another one that was losing 400 million. Which one should we do? Should we advertise to consumers and then send those referrals to real estate agents? Yeah. That seems like the business model that's currently working.
And it has been working for a long time.
And they're still doing that. So it's not a complete change. But anyway.
They're just cutting off. Yeah. And I'm going to play devil's advocate, by the way, when we get done with this.
The wind down of Zillow offers suspected to last several quarters, which we also talked about. And we have insider information. That's exactly what they're going to do. Barton said they didn't specify beyond the percentage how many people might lose their job in the earnings report. Zillow reported brutal net income loss of $328 million in third quarter, mostly due to the $421 million net loss before taxes. Wow. The company reported $1.73 billion in total revenue.
So let's see.
68% of that total came from Zillow offers.
So Lisa says it good for their corporate taxes, carry over losses for years.
Yeah. However, Zillow, and which also is good for their stock, and laying off people is good for your stock price too. Let's see. I'm going to kind of fast forward. They acknowledge that they were unable. This is the quote from Barton. He did acknowledge that the Seattle-based business has been, quote, unable to accurately forecast home prices, with Zillow offers unit economics swinging approximately 1,200 basis points from Q2 to an expected negative 500 to 700 basis points in Q4.
Wait, it's just hitting me. And maybe I'm late to the party on this, but their own model for estimating homes, Zestimates, is now biting them in the butt.
Yeah. And this is the marketing opportunity. Zillow's CEO, Rich Barton, acknowledged a Seattle-based business has been unable to accurately forecast home prices.
Yeah, that's
that's a terrible quote.
Yeah, and then Ryan Bocros, I don't know if he's making this up or this was actually from the earnings call, but he says, quote, we determined the unpredictability in forecasting home prices far exceeds what we anticipated.
Which is why it's unpredictable.
It's but CEO, okay. Yeah, that's so.
Oh man. All right. Because of the home price forecasting volatility, we've had to reconsider what the business might look like at a larger size.
Well, okay.
So he's a co-founder. He's been around a long time.
Millar says that he'll miss the Zestimate. They're not getting rid of the Zestimate.
They're not getting rid of the Zestimate. Maybe they should, but they're not.
They're just not buying houses at their own estimated value.
Dusty Martin said the hilarious part for the last 24 months is that every time I list a house, they change their estimate to my list price.
Yeah. So remember when Clayton, a great contributor, so remember when he went through the process, he's like, dude, if you can give me that for my house, I'll take it. Went through the process, the estimate changed once he signed up.
And the fees and the remodel and all that kind of stuff.
Yeah.
So they did still buy showing time. The purchase triggered a Federal Trade Commission inquiry regarding Zillow's array of agent and consumer data. Did that ever go through? Does anyone have any info on that? If that actually closed and went through?
Did Zillow close on showing time?
The way you're talking about who
Zillow Group closes acquisition of showing time. There you go, October 1st.
Okay, so it did close.
Yeah.
All right. Let's see if they keep it. If the call was difficult for Barton, it was also tough for analysts. This is another quote from the Housing Wire article. It was also tough for analysts used to congratulating the CEO on a job well done and asking often technical questions. One analyst after another politely asked Barton how he could reconcile closing Zillow offers with prior quarter statements. In other words, what we were talking about in August, like, oh, this is going great, and then not so great.
JK.
Ian sorry, I know, sorry, of Wedbush Securities. That's a that's a I can't say his name, her name.
Okay, I'm not reading along, so I don't know what you're trying to say.
There's a quote, and I wanted to get their name out before I got the quote because I think it's funny. So this is one of the analysts that was politely, talking to Rich about these statements. Quote, "The way you're talking about Zillow offers is a little different from the way you talked about it in the past."
That's so nice.
Yeah, that's such a nice way to phrase that. Which good on them because they got to get the information, but they have to do it in a way that doesn't insult the CEO, and make them hang up.
Yeah, you can't insult the CEO of the company you're trying to get info from.
They referred back. He always referred back to his opening statement, saying it has a lot more potential as an asset light business. So, in other words, they might still do it here and there, but they're not going to grow it and expand it like they were thinking.
Now, can I play devil's advocate a bit? Because I know we need to move on.
Yeah. Let's talk it. Yeah, we're going to play devil's advocate. We're also going to get to some comments. We're going to get to the YouTube comments you guys have been talking about, and I want to try to bring up some Clubhouse folks and hear what they have to say too. I'll just hold it real close to the microphone.
So they already, we already said on the show they weren't the first to do this iBuying thing, but you can't. They're a tech-based company that's really trying to push the limits. They started with the online search portal, and then they've grown since 2007, right, Ray?
Right.
So they've been changing the industry. They've figured out how to sell our own leads back to us. And I'm not supporting any of this, so it may sound like I'm having their back, and it's always tough to do that. But in all those lawsuits, I feel like I always had their back. My cat's walking around my cables, so there you go. So if everything turns off, you know why. But you can't be a trailblazer without breaking a few eggs, right? Like maybe things don't work, but when they look back on it, they're going to say, "Hey, we changed a lot of things. We literally changed how people find homes, search for homes, how realtors get leads. They've changed a lot of things. So maybe this thing didn't work out. Obviously, they're going to lose lots and lots of money, but I kind of just changed my thinking about it because we do bash Zillow a lot, and I get that. But I kind of like to change my thinking on things.
I don't really bash Zillow a lot. I think a lot of agents bash Zillow a lot, but I think there's a place for them in the market.
Well, that's what I meant. I meant we as agents bash Zillow a lot, not we as a show necessarily. But in my opinion, hey, they really tried to do something. Yes, they overextended. Yes, they missed the mark quite a bit. But you can't kind of push the limits like they're trying to do without, having some fails, and it's going to be some major fails.
Yeah. Dusty Martin with a good point. She said, "Here's a wrench in the engine. What if they just buy Open Door or OfferPad? Why reinvent the wheel at a loss when you can buy?"
Yeah, they already bought Showing Time.
Well, I don't think Open Door has had profitable quarters either. We've talked about them in the past. I'm not sure about OfferPad. I can't remember. Open Door and OfferPad. I may be getting them mixed up. But I'm going to look it up. I think Open Door losing money. One of the top Google searches.
I mean, you got to remember, kind of their model is it's what an investor would do. If I was an investor, I'd try to buy a house for less than market value and fix it up, and then sell it for more than market value or at market value. You can't be sustainable and buy things at market value and resell them. It doesn't work that way. In theory, they provide a service for people that want to, however they sell it, the ease of selling a house with all the hassles. But then when you really get into it, there's lots of different fees and
August 11th, 2021, Housing Wire. Open Door ramps up, but loses $144 million.
Oh, and this isn't a branch of their business, right?
No, this is all they do. Company CEO Eric Wu says Open Door has had an outstanding quarter, and that iBuying will one day make up a majority of home sales. I mean, yeah, if you're willing to, who wouldn't sell a house to someone who's willing to overpay,
right,
and then undersell it on the market? You're going to buy from them and you'd sell from them. Yeah, this is
the thing with Zillow is, like we've said, they're just going to market these properties and make money back in other ways. Like right now, they're getting publicity. I think Pete said it in his comment earlier. They're getting all this publicity and press about this. People are going to go to Zillow oh yeah, I forgot about Zillow, and they're going to go search thing, so they're going to make money off it. But when OfferPad and Open Door, if it's your only business model,
All right, I'm looking up Redfin now. Well, the most recent news story I have from March 11th. So that's
Pete says Redfin lost money for 7 years. Wall Street funding is practically limitless when they think they can get an edge in a market and get paid down the road.
So, and we could talk about that a little bit too. I think Main Street real estate agents saw this coming a long time because, we're boots on the ground, we see overpaying, we see properties compared to the other properties on the market, not even being up to average as far as the adequate amount of fix ups, quote unquote, they did to prepare it for the market. And yet they're trying to gain so much more than what they paid for the home, and they overpaid for the home in the first place. So that was the basic problem. It's the same problem of any investor. They're buying a home and they overpay for it. Then they don't put enough into it to get what they need out of it on the open market, but they try to list it for that top tier price. They wind up sitting on the market a long time. As I tell my clients, what would you do if I showed you a property that had been on the market a while and reduced? What offer would you make? And they're like, well, we just throw them whatever. So with the rest of the market, that's the same. Like, that's nothing new. That's the same strategy that failed investors have done for years. So the basic problem was that they were relying so heavily on the algorithm and not a real estate professional who was taking them through. They could still do offers. They could still do that, but they should probably hire a real estate professional to do the evaluation for them, to represent them as a seller.
It's going to slow down Zestimates quite a bit.
It would, yeah. Would you like a Zestimate of your home? Click here, and then we show.
Essentially, it's a BPO. Yeah,
but that's still an opportunity for them in the marketplace if they're trying to find a way to invest in real estate, because that's what it. Whenever they started doing the iBuying, and whenever Open Doors started it, whenever Redfin started it, the news, you remember all the headlines were like iBuying to replace real estate agents. And we're like, no, these are competitors for investors that are in the marketplace. These are not competitors for real estate agents, because our clients will always have the advantage. They will always sell for more. They'll always hit the market more prepared. They're always going to be able to purchase at a better rate because they have the representation that's solely focused on them and not using a computer or an algorithm. So this is not new news. It's just catching Wall Street by a shock. Yeah. It's not catching the Main Street real estate agents. We're not shocked.
No,
it's Wall Street that's shocked. All right.
By the way, Pete, I did read the first sentence of your comment, and then I stopped reading. So I did read a portion of your comment.
There. All right. Wall Street funding is practically limitless when they think they can get an edge in the market and get paid down the road. Yeah. All right. Maria Scripp. They want to have end-to-end touch consumer experience in real estate. Yeah, for sure. Which that's fine. I think they can do, but for the valuation of a property, purchasing of a property, they probably need to hire a real estate professional to help them in that process. I don't think you can just click a button and buy a person's largest investment or sell a person's largest investment and successfully cover all the same things that a real estate professional would actually cover. Now, what's interesting is like the FHA. No, it's not FHA. The FHFA.
FHFA.
Yeah.
Federal Housing Federal Association.
So they've now gone, and we covered this. Was it last week or 2 weeks ago? They've gone to desktop appraisals. Digital appraisals.
Yeah.
Basically, using appraisers and computers. And SCAP was like, this is not a good idea. SCAP's a appraiser.
Hey, by the way, before we go on, if you're on Clubhouse and you want to speak, make sure you have something in your profile that says you're a real estate agent. If you don't, we're not going to let you speak.
And speaking of speak, we should probably, which I'm going to see if I can get this loud enough so that people can talk through Clubhouse.
Just don't let Ryan talk. He's just going to talk about the Astros. We don't want that.
He's so good looking, like Dale Earnhardt.
I know.
All right. Let's see. Who's up first? Anyone want to flash your mic and say something about the Zillow? Everybody's running to their phones now. They were doing research.
I know, they're like, just these guys need to stop.
All right. Well, Ryan, you want to say something now? Yeah, here he is.
There he is. You guys roast me in. You roast me in. I have a lot of thoughts, but I think one of the main things that we should, as Main Street real estate agents, one of the main things that we should keep in mind here is that Zillow has given us a lot of firepower now. Dan, you brought it up earlier with the Zillow, and hey, let's try it. Now there's no reason to let's try it because we've received some pretty solid proof that the algorithms don't necessarily work. And if Zillow, if I was a real estate investor and I was losing $140 million a quarter on my real estate investments, would you as a consumer trust me with your real estate investment?
Well, no.
Great point. Especially when it's your own investments and you're using your own data that you then claim that they can turn around and use.
Yeah. If I was your financial planner and I was losing you that much money over that quarter of, that amount of time, you would fire me.
Good point.
Relying on and using this information that's coming from algorithms and from Wall Street investors, if you will, to set any precedence for what we do inside of the market as a real estate consumer. Better yet, how do you?
Oh, hang on. Oh, sorry.
To advise you in the best way possible, and still hold on to my fiduciary duty of making sure that your interests are numero uno, right? So anyway, I think to me that's one of the biggest and best things, the piece of ammo that we have as on the street real estate agents now. Sorry, I'm a little out of breath. I went for a run.
It's okay.
We as real estate agents on the street, this is the biggest piece of ammo that we have going for us now when it comes to a conversation about, one, what Zillow was paying for homes, and two, what Zillow and other analytical appraiser type Zestimate things that are out there. This is proof positive that the local guys and gals in the business are we have value here, and we have proof that those, who is it? It might have even been Pete. Somebody's Twitter handle is Zillow can't smell cat pee. Or something.
Yeah, very true.
That's great.
I think we have an opportunity here to go back to some of those talking points and really show that your local real estate agent is indeed the expert. We can use numbers and data, but there's still that aspect of the numbers and the data can't smell the cat pee in the house, right?
Zillow can't smell cat pee. Who's going to put that on a shirt and sell?
Yeah, or the crazy neighbor with the bunker built in his backyard next door.
That's so good. Well, thanks, Ryan, for popping up. Thanks for your comments, man. I think I completely agree. There's a whole bunch of comments on the YouTube, too, as you were talking, that they were chiming in saying, yes, yes. Pete Thorpe also said, Ray, we can hear him. No need to contort. But contorting was fun. But I think people agree with you hands down. Marie Script said, hey, no, I sold the cat pee house. Yeah, I think
we all have, but we sold it for the market value. We didn't inflate it because we actually smelled the pee.
She's going to make the t-shirt. All right. Robert says it looks like Open Door is changing their business model as well. They're hiring buyer's agents and offering listing appointments for those agents from sellers that do not want to sell to Open Door. So this brings up the elephant in the room that I wanted to talk about today. One of the things that happened as Zillow began to grow across the country with their iBuying is that they opened brokerages, and I think all 50 states. I could be wrong, but I think it's all 50 states. And as they did, they hired employees who were licensed real estate agents. And they said, we're only going to use them for our iBuyer/offers program. That we're not trying to be a competing broker with real estate agents in the marketplace. We're simply doing this so that we can better serve those people that are interested in the iBuying program. So what's going to happen to them now? Are they going to, is that part of the 25% of the workforce that'll be fired? Are they going to utilize them in a different way? Are they going to have Zillow brokerages and hire to try professionals? Like I said, instead of using a professional like one of us, are they going to try to hire their own professionals to then do this, quote unquote, the right way? What do you think is going to happen? Dan?
Me?
Yeah. What do you think is going to happen with them?
With who? With Zillow?
No, with the agents that they've hired, the brokerages around the country.
They're still going to keep doing that. I mean, it's still the same model.
But for what? But for what? They said that they were only for the Zillow offers.
They said that, but it's just like Open Door. They're still going to be they're still a brokerage somewhere. They're still going to put signs in yards. They're still but they're just going to be more of a traditional model. Because remember who was the last CEO that said, no, we're not coming after the agent. No.
A traditional model for Zillow? You really think they're going to risk that?
So what are they going to do? Just shut them all down? Just shutter all these brokerages?
But a traditional model, Zillow with a traditional model reeks of not having anything innovative or new.
No. I don't mean traditional model. I mean have a physical agent out there to reply to these, instead of, you don't have to go by the Zestimate anymore. We'll send an agent to your house. You jumped on you got our Zestimate. Now you can have an agent be at your house tomorrow afternoon at 5.
But how far do they want to take that when they could just get the referral? Because that's what I think they're going to do, is that they're going to shutter operations as brokerages. They're going to keep assigning broker principal in all 50 states who's a member of all the MLSs, so that they can scrape the data now that they're members of the National Association of Realtors. And then they're going to send referrals. And so I think the news story is going to be like, hey, we did let go of some of those agents, but we're keeping all the brokerages only to use our Zillow Flex program, in which we send referrals everywhere.
All right, but they're going to have to get rid of. So we're going to wait for a story that says Zillow cuts out 57% of its agent force.
Yeah. Zillow fires agents, but maintains brokerages for referral program,
which is what Ryan's saying. They can't shut the agents down. They now rely on the IDX for their data. Have to have a broker to get that IDX feed. But that doesn't mean, Ryan, that they can't shut down the agents. They can shut down the agents, just not the broker.
Right. They can't. They have to maintain that principal broker. Maria's script says Flex gives them a way to charge a nice big referral fee. That's what I think so too. And honestly, I think that's a better model, a way better model than the iBuying.
Having an agent working for Zillow, they can flex it to an EXP agent or whatever, right?
Yep. Yeah.
Okay. All right. I just think it's
so they burn the bridges though with a lot of big teams. Dusty Martin says, hey, they pair with teams, but they made themselves a brokerage to get MLS access. I think they will try to pair with teams, but they really burned a lot of brokerages when they entered into certain markets and basically got rid of a lot of the big teams, doing something different with their offers program and things like that. So I want to see what's next. I want to see what's the next innovation, because there's a lot of room to innovate in the real estate process. There's a lot of room to give tools to real estate agents to make our jobs easier. And a big company like Zillow has the money to do it. Well, they did before they
lost 500 million.
But if they really did partner with, they have the dot loop, they have the showing time. If they made an all-in-one shop for real estate agents who handle way more transactions than an individual consumer, then I think that's the play. But an individual consumer, on average, they sell one property every 5 to 7 years. So why wouldn't you target the real estate agent who even the bad ones sell like one property a year? It's still 5 times more than a regular consumer. So why wouldn't you target agents doing a much higher volume, and willing to pay a big time referral just to get into the tech, to get in and use the tech?
But did iBuying burn a lot of bridges? Because now I want to go back to Pete's comment. I know he said I didn't read it, so I'm going to read the whole thing now.
Okay.
Zillow just got millions of dollars in free advertising by all of the agents posting about it, what we're talking about. And they are burning up the phones to agents offering crazy discounts and squeezing other markets with the Flex program. The very agents wanting them to die are the ones that keep them running by infusing them with cash. Lots of cash for leads, because like it or not, the public still sees them as competent and associates them with the real estate more than realtors. Thanks, NAR.
Well, and yeah, a lot of what he said is true. And like it or not, you could still give them $1 and get back 3 to 4, depending on your marketplace. So, you know, how many times would Pete give me $1 if I told him I'd give him $4 in return? He'd do that as much as possible.
Yeah.
And that's the conundrum, is that they're making money off of most agents not returning calls and not having a presence in the marketplace. And there are clients there to get. Pete Thorpe, it's dog and dot loop. It's okay. It's not the best.